Welcome to the A2 Show with Andrew Cass and Aaron Parkinson, bringing you the trends and topics that affect our lives the most: business, politics, fitness, family, and finance. With over 50 plus years of combined business experience and over $1 billion in revenue generated, your hosts have a unique gift for seeing many steps ahead where others do not. They bring their unfiltered, contrarian views to the show every week to help you win in business and in life.
Aaron, question for you. Are we on the brink of a financial collapse? Because at the time of this recording, people are going haywire when they see the stock market lose about 2,000 points in a matter of a couple days, and all of a sudden, the pundits come out with the interest rate cuts, and we need this, and we need that, and we need stimulus. It's really crazy, and we want to speak to you today from a standpoint of being a business owner during this, and also being an investor in somebody who wants to put capital to work or protect capital during this. So, what do you think?
My short answer?
Oh, we've got plenty of time.
I don't know. My longer answer would be, I actually believe that we're in for a rough couple of months till the election is done. And then I think you're going to see a surge of optimism, and I think you're going to see everything level out. But between now and then, I think everybody needs to buckle up.
Yeah.
And we're going to talk about some of those things today. And then after that, that's just my belief system.
Yeah.
Sometimes you and I play opposite sides of the coin. I can be the eternal optimist. You can be a little bit more of the careful pessimist, and we kind of end up somewhere in the middle. But
I like to say pragmatism.
Pragmatist, yes.
Because I'm generally optimistic but cautious. And I think there's a saying, and I think it's a military saying, that says something along the lines of prepare for the worst but expect the best. And that's normally how I do things.
I like that.
I kind of come at things and I'm like, well, what could go wrong? I'm a little bit of an analyst with things. What could go wrong? Or why is, and thank God, I don't know where I got this from, Aaron, but thank God that I'm wired to be skeptical, and I think that that's a good thing. But sometimes it can get analyzed as a bad thing. Skepticism sometimes seems like negativity, but a lot of times it's caution.
Yeah, and I don't think there's any right or wrong stance. I just know my personality, and my personality is always everything's going to be fine in the end. I'll work it out. It'll all work itself. Let's just go, and I think that's probably cost me in the past a few times.
Yeah, there's also a saying, what you don't know won't hurt you, which I think is probably one of the most damaging statements I've ever heard. Really, what you don't know will hurt you, in my view. So there's a lot of, contrarian thinking that I take on. I adopt a lot of contrarian thinking. I think it's in our show intro, right? We take a contrarian approach to things. So I think we will take that approach here today. But I agree with you. I think the next few months are going to be really, really tough. I'm a little more concerned about not only financial, but I'm most concerned about some sort of civil or social unrest, which we talk about quite a bit on the show, which will have a very dramatic negative impact on finance. So I'm concerned more about war right now because they're breaking out all over the world. And I'm concerned about the things that can come from war, such as maybe an EMP attack, maybe a grid attack. I'm very concerned about the grid in America. And the grid, by the way, ties to the stock market, right? So if we get hit with a grid attack, let's say, maybe it's an EMP pulse attack, nuclear maybe seems like a long shot, but there's a lot of people who are concerned about that right now because of the Russia thing, and we're sort of provoking and instigating that. But all of these things will really, really, really hurt the banking system and the stock market, and then consumer confidence, and ultimately what's happening with spending in your business, which is where we're going to go today. So sometimes it seems like it's just finance and politics on the surface, but it really stems back to the economy in your home, right? What you're doing with your retirement funds, your savings, your debt, your rates, right? So you start to lose options when we get into these little micro crises. So there's a couple little fronts right now. We have a financial front with inflation being high and rates have been high for a long time. I think that's the point of today. This debt crisis is out of control. I'm going to bring up this screen here a little bit and show you where we're at from a debt standpoint. You did a presentation on the debt crisis to, I think, a real estate group, right? Mm-hmm. So there's that element as well. And then we'll talk a little bit about what are some of the things that we're doing to hedge ourselves. I'm a stock market economy, CNBC every day, what's going on with companies, what's going on with CEOs, what's going on with trends in different places. I trade a little bit, right? So I'm always looking at commodities and Bitcoin in the markets and whatnot. I guess how I'm wired, since I used to be in that business back in the late 90s, early part of 2000. So I'm still plugged in, I guess you could say, right? So I'm running a business, right? But I'm also still very plugged into the markets, into the geopolitical things that are going on that can affect investments.
Well, and the reason that we were already planning on doing this show anyway, and then between last week where we were talking about the week of chaos while I was on vacation politically, which we talked about heavily in our last episode, between us deciding to do this episode today and now, we've had another bunch of chaos happen, but in a completely different space, right? In the finance space, where we're seeing the Asian markets take the biggest dip they've had since Black Friday or Black Monday? 2008.
2008 was right around the time of that financial crisis where it was the mortgage debt cycle, right? 2008-ish.
Yeah, it was. So
when a lot of the big investment banks went down, like Lehman Brothers. And
somebody smart is going to correct me in this show. The Asian markets dropped the single largest amount in one day. It might be the Black Monday. I think that was 1988, not 2008. Or it could be 2008. Whatever it was a precipitous drop.
You're talking about the one this week, right?
Yeah, the one this week. And then we've had the U.S. market doing something very similar. It had a huge drop, earlier in the week and tail end of last week, and then it kind of rallied a little bit, and then it had another big drop. So I can see your screen pulled up.
You see it right now? So the viewers don't see it, but I'll read it. Japanese stocks rebound from worst crash since 1987. And then we were talking before the show, Aaron. A lot of people don't know this. I didn't know this until I was watching one of the financial minds I follow on YouTube. Is Japan just raised interest rates for the first time in something like 17 years, while everybody else is talking about lowering rates now. The first thing that happens in America is anytime there's a hiccup, they're like, oh my God, we need to lower rates. Stimulate. Mm-hmm. Everybody just wants to jump to stimulate, which I think is part of the problem, is that everybody thinks the government's going to save every little hiccup in the market or in the economy. But yeah, this was interesting right here. 1980s, Japanese stocks rebound from worst crash since 1997 while global markets are mixed. And then they raised rates, which was interesting. We'll talk a little bit about rates here today. I'm also going to bring up this. I don't want to pivot too quickly. Keep going on the Asian stock market thing, because yes, it spilled over to America.
Yeah, whether it was triggered by America or whether it spilled over into America, the American markets have been wild over the last 7 days. Now, those things did happen. If you're actually, you take a step back and you look at it from a more optimistic lens, the market is still way up for the year. Massive, right? So you can look at things through a microscope, or you can look at things from a larger lens. And if you're an investor, if you're a good investor, you tend to look at it from, a couple steps back, not what's happening over the course of the week. But what it's telling us right now is there's a very big lapse in consumer confidence. Mm-hmm. And when there's a lapse in consumer confidence, what ends up happening is everybody tightens up their purse strings.
That's right.
They don't want to buy, and that has a direct impact on everybody's business. So the presentation that I was doing the other day, what I was saying to this large group, and now keep in mind, this is a group of 250 of America's largest real estate investors, not realtors, investors. So these people are owning anything from 50 doors to 5,000 doors. These are serious players. Mm-hmm. And I was talking about it from a marketing standpoint, a business and marketing standpoint. And we've been around long enough that we've seen these ebbs and flows. We've seen these big crashes, these small crashes, these, going into recession, out of recession. We've been around long enough to see all of these things. When I look back historically at the pressures that were put on business owners in these different times, you could usually isolate it to one or two things. Like if we look at 2008, it was the bankers, making absolute ridiculous decisions on mortgages and cratering the whole thing. And you could pretty much.
It was all tied to the mortgage derivatives and 0%
it really was.
Financing and no equity in homes
and you could go
pools of subprime mortgages on their balance sheets. It was
exactly
when you look back at it, it was the most insane gambling like arena they were in shocking that even big banks would participate in something like this. I mean, everything was leveraged to the gills.
Absolutely. And if you don't know anything about it, go watch the movie The Big Short. It'll give you a pretty good overview of it. And it's a very entertaining movie as well. So historically, when I look back, I can pinpoint one, maybe two things that are causing downward pressure. Right now in this presentation that I was doing the other day, I was saying, well, number one, we have a serious debt issue. If we look at, let's just say the last 10 years, 2014 Q1, household debt was at 8 trillion. Non-household debt was at 12 trillion. So 8 and 12. Okay. When we look at Q1 2024, household debt is at 12 trillion and non-household debt is about to eclipse 18 trillion. So the debt is way up.
So you're talking about consumer debt right now, not the national debt, which I'm going to bring up here in a second.
Correct.
Obviously.
I'm talking about consumer debt, right?
And by the way, that's the highest in history to my knowledge.
Absolutely it is.
Okay.
No question
it is. That's a huge red flag that a lot of people
if you actually look back like 2004, if you go back 10 years earlier, it was at 6 and 8. Then in 2014, it was at 8 and 12. As of right now, it's at 12 and 18.
Wow.
So we have just this massive debt problem. Number two, we've got the inflation issue. If you look at May 2020, we were at almost zero in May 2020. Then we spiked up to
inflation. So this is right around the time of COVID.
Correct. This was right before COVID.
Well,
right?
That was, would you say May 2020?
I'm talking about, May of 2020.
May of 2020 was 2 months after it was unleashed.
Yeah. So inflation was like literally almost nothing.
Oh, yeah.
At that point.
Yeah.
And then it spiked, according to the reports, at a high of 9 in July of 2022.
Right.
And it's leveled out.
About 6 now? 6-ish?
According to the reports that are out there, it's actually leveled out to be about 3.5, 3.6. Now, I don't believe that.
No.
Most people that are like,
it's an election year, buddy. Of course it's
well, people that are buying
times
stuff,
it by 2.
People that are buying stuff are like, no, man, like prices are up way more.
Because, when you look at the general inflation, that's fine to look at big picture, right? That's fine to look at macro. But if you want to look at micro inflation, then you can just look at the cost of gasoline year over year. And you
always
can look
a big
at the
indicator
cost
in the U.S.
of groceries year over year.
Yep.
And you can look at the cost of electricity year over year. These are things that are inflation at the grassroots level that you can see it from the entire last couple of years. And a lot of it's policy in America. And a lot of that policy exists in Europe, and a lot of that policy exists in Australia and different big developed worlds. They tend to operate in tandem, and they tend to have very loose money policies, right? We're talking about that here today. They tend to have, this is one of the problems with fiat money is you can just keep printing more of it.
Correct.
You keep printing more of it. What do you think is going to happen? Economics 101 is the more money you print, the more inflation you're going to have. So we can talk about supply chains, of course. We can talk about, of course, coming off COVID with lockdowns and whatnot. That was absolutely treacherous to everybody. Horrible policy. But if you keep printing money, and right now, the Biden administration and the Trump administration are the two presidents that have run up more debt than any president in history. In fact, Trump ran up more debt than any president in history combined, and Biden's right behind him and will probably finish the year right around the same amount of debt that they ran up. And I don't even know, Aaron, being in the U.S., I don't know how they pass these bills so fast and shove this money out the door so quick with almost no checks and balances. It's really one of the most fascinating things I've ever seen. And not to get into politics on the show because this is more finance today, the only candidate talking about the debt crisis is Robert F. Kennedy. The other candidates will not talk about it. I don't understand it. Trump won't talk about it, and Harris won't talk about it. They will not talk about it. And it's the most existential thing we could talk about. You could argue it's number 1 or 2, the debt crisis. And you're on consumer. I'm talking about just overall.
You're talking about national.
I'm talking about national, which if you look at this right here quickly, I'll bring the screen share up. This will blow your mind. Tell me you can see this.
I can see it.
That's the price of gold. Let me go over here. We'll talk about that in a minute too. So look at this. Look at this clock. U.S. national debt at the time of this show is at a little over 35 trillion. Okay, you see it right here, top left. I don't know if you can see my mouse moving. Top left. Now, I can tell you Trump was about 8 trillion and Biden's about 7. Think about that for a minute.
That is so
just the
crazy.
Just the last 2 presidencies alone, right? The last 2 presidencies alone, what is that, 15, 16 trillion of the 35?
It's almost like half of it.
It's almost like half of it, exactly right. And no one's talking about that now, and that's a problem.
Well, so when we look at, like, circling back around, talking about downward pressures, right?
Yep.
Talked about debt, consumer debt. You've got delinquencies at an all-time high on auto and credit card right now.
Delinquencies on auto, okay.
If go look at auto delinquencies right now, blow your mind. Go look at credit card delinquencies, blow your mind.
Let's see while you're talking.
So we've got debt issue, we've got inflation issue. Now we've got interest rate issue. So if you look back, January 1, 2022, interest rates, January 1, 2022 were pretty much nothing. Like it was free money. It was like 1.9%.
Right.
As of today, it's sitting at around just under 7%. So our interest rates have gone up effectively somewhere between 300 to 400% over the course of 2 years. Now, what happens when interest rates go up? Well, if your mortgage rate goes up and you can't afford your mortgage, my mortgage just renewed, it's higher right now. Well, then is downward pressure. People can't afford it. Delinquencies, people trying to massively sell, dilute the marketplace, et cetera, et cetera. It has tremendous pressure. If you look at credit card interest rates or like business loan interest rates, if they're that high, business owners don't take them. They don't invest. Consumers don't take them. They don't invest. So it stalls out the movement of capital. And there's roughly a 300% increase in only 2 years in interest rates right now. So it's stalling people out on buying.
Check out these 2 screens I just pulled up. I won't show them, but we'll talk about them. Number 1, based on what you just said, delinquency rates at highest level in almost 30 years on auto loans. You see it?
Yep.
Right? Credit card debt, your point here, consumer credit card debt. Credit card debt just hit a record high, and that was as of 3 hours ago. So, wow. So auto and consumer credit at record highs. It's amazing that the White House gets on and touts this economy and this consumer confidence and this inflation thing. I mean, we've got high inflation and we have debt out the wazoo. It's the worst it's ever been. I don't know about the housing market. I'm going to pull that up as we're talking too, but auto, credit, let's look at housing.
Yeah. So summarizing again, right? Debt issue. You got national debt issue, consumer debt issue. You got inflation. You've got interest rates at certainly not an all-time high, but still 300% higher than they were.
They're very high. Yeah.
Only 2 years ago, 2.5 years ago. Then you factor in there's multiple countries warring at the same time.
Did you say warring as in
warring? War.
Yeah. It's heating up. It's not getting any better in the Middle East. I mean, I think the last I checked, the U.S. is quietly sending personnel and equipment into the Israel area now. So now they're not only sending to Ukraine, but now they're also putting technically some boots and some weapons on the ground. Well, already they send for weapons in Israel, but now there's Iran closing in on that section, and the U.S. is going to help Israel, right? So
yeah. So you've got these are things that people pay attention to, and the most recent stat I looked at was that this was according to the American Psychiatric Association Morning Consult. 70% of Americans indicated they were anxious about the upcoming elections. I also think that number's low, and especially after the assassination attempt, and then obviously, Biden stepping down and Kamala being put in, like
a ton of turmoil and unsettledness, and just
what I started talking about in this piece was that when I look back at these different bumps in the road as a business owner, it was very clear for me I could pinpoint 1 or 2 specific issues. Right now, there's like 5 or 6.
That's my concern too. It's like a perfect storm of half a dozen of these things, right?
So what do I think is going to happen? Typically after a big U.S. election, it doesn't really matter who wins historically. There's this wave of optimism that comes because people at least know there's a leadership. They know what they're going to be dealing with.
That's out of the way.
And they can kind of go back to business, and the onslaught stops. The onslaught of fear-based election media for 6 months straight stops. As everybody gets
even
to
if
breathe.
it's just a honeymoon on a not so good candidate, at least that's out
Doesn't
of the
matter.
way, right? It's that piece is off the table, right? Which I think is
exactly.
important.
So I feel like from now till then, with all of these things happening, really rocky. And this isn't just a feeling. maybe our listeners and viewers know or don't know, I run an agency called 7 Mile Media. We control a significant amount of media spend on a weekly, monthly basis. And so I can see the conversion metrics in all of these different businesses. And over the last year, it's down, but over the last week, it's wild. Like the spikes in buying and selling patterns, or not buying and selling patterns, but buying and not buying. Like we've been running your media for your company for years, Andrew. And historically, we just know like steady Eddie, this amount of sales are going to come in every single day. And right now we're seeing like lots and zero.
Big swings.
Lots
big
and
swings.
Zero. Huge
Almost
swings.
Like the stock market. Exactly.
Yeah. And buying patterns often mirror the markets because markets are a reflection of people's emotional state. Mm-hmm. And so it's volatile right now.
Yeah, that's the word. It's a lot of volatility.
I'm going to talk about the things that we're teaching our clients and we're suggesting that business owners do, especially over the next 3 months. But there's really two sides to this equation. If you're a business owner, there's things that you need to do. And then as an individual or as a family, as an investor, mm-hmm. there's things that you need to be doing as well. And you tend to spend a lot more time in that space because of your Wall Street background and because of your pragmatism. You know, let's maybe talk about the investment side right now. How are you viewing this market and what are you doing to either take advantage of it or protect yourself from it?
Yeah, I think a lot of people are generally only invested in the stock market because they're not investors. So they can easily mm-hmm. have a 401k, an IRA, a fund or something like that. So they're most people are looking out of the corner of their eye at the stock market because they're thinking this is my retirement capital.
Sure.
I don't know how much money is actually invested in the stock market. You know, for U.S. citizens alone, it's probably a massive number. It's obviously trillions. Maybe you can look it up while I'm talking.
I'll look it up.
Right. So how much actual money is invested in the stock market on behalf of the few 100 million U.S. citizens? Right. This is just in the U.S. Forget worldwide. There's plenty of money worldwide coming in as well. So I think people are always looking right there. And I know that you never want to time the market and you never want to try to be in then out, then in then out, then in then out. But like you said a second ago, my concern coming into 2024, not only now, but just coming into 2024 was these storms everywhere, from war to inflation to social and civil unrest. I mean, it's to the border crisis. I mean, all these things add up and they're a compound effect. I mean, we talk about the debt. The amount of debt that an open border policy is creating alone for America is staggering. I mean, cities are really getting hammered right now in America. And now I'm seeing that that's happening in Europe a little bit too. There's social unrest and outbreaks in riots in Europe. They're doing the same thing. They're pushing this illegal migration thing onto the citizens in Europe. I wasn't aware of it because I really only followed the US. These are things that are handicapping society, right? So you have so many things going on that obviously you need to be defensive right now. I mean, if you have I think if you have the liquidity and the flexibility to be able to go to cash, I mean, Warren Buffett's been selling every month, if that tells you anything. Warren Buffett has more cash on hand right now than he's ever had in history. He has something like $100 billion in cash on hand right now. He's been shaving every month. If you look at it's public information because they're public companies. And Warren Buffett is the largest shareholder in like 3 or 4 companies. I think Chevron, Apple, right? So you can see when he sells. And if you look at Warren Buffett, he has been trimming his holdings every single month in 2024.
Interesting.
Right? So I always like to follow the money, look at the money for good or bad. And oftentimes you can see money coming out, right? Now you're also seeing...
Well, I want to interject something there. One of Warren Buffett's most famous quotes is, buy when other people are fearful and sell when other people are greedy.
Yeah, he says buy when there's blood in the streets, right?
Right. So
we're not there yet.
If he's selling off a bunch of stuff to get cash in hand, what that's telling you is he projects a big drop and he wants to come in and scoop up things at a discount.
Perhaps, but he's also 95.
Strategy.
So to take money off the table at 95, you have that going for him as well as he's not a young guy who needs to be invested at this point. So he might just be trimming allocation because of age. I don't know.
He's
trimming at the top. He obviously sees something he doesn't like, right?
He sees something he doesn't like. I want to go back and answer your question earlier about the money that's in the market. Yeah. 162 million Americans, or 62% of U.S. adults own stock.
Okay.
The top 1% holds 50% of all the stocks, worth $21 trillion.
There you go.
The bottom 50% of U.S. adults hold only 1% of stocks, worth $437 billion. So total amount... Yeah, U.S. people owning stocks, $21 trillion, $437 billion.
It's a lot of people exposed.
Yep.
It's a lot of people exposed. We've got interest rates at record highs, inflation at record highs, consumer debt at record highs, auto debt at record highs, mortgage debt at record highs, 2 or 3 wars happening, invasions at the open border policies. I mean, you could go on and on and on and on. And if there was ever a perfect time to not be in it at all and to be cash heavy, it would be now. And I can't think of another time, to your point, Aaron, when that many forces were at play working against us.
Yeah,
now. It'd be a tough. I guess I could go back to the 60s during Vietnam, right? With all that social and civil unrest and the wars but I don't know that we were running up debt like that. We weren't a debt heavy society at that point. People didn't have 9 credit cards in the 60s, right? It just wasn't a thing.
Well, I can tell you that, and this is something I'd recommend everybody does who watches or listens to our show. I have a finance meeting every single month with my wife. And every month we go through what is the income that's coming in? What are the hard expenses? What is left over? What is our plan to do with that? Where are we investing? And we do this together every single month. And we started doing it, Andrew, maybe you find this silly. We only started doing it together 6 months ago.
Really?
And the reason why, what's that?
2024. Yep.
And the reason why we started doing it is because she runs the house. I run the business. She also runs our real estate portfolio. So she runs that as well. But she runs all of our finances in our house. And I didn't really know what was going on in the finances in our house. So then I start jumping to conclusions, right? Yeah. And I don't know if she really knew the numbers inside and out as well as I would in the business. So she wanted to have more granular insight onto what that looked like. First off, right off the bat, in this current economy, we said, what are the things that we're just wasting money on? And I know that's a really simple thing to ask people. But for example, we looked at how much money we were spending on takeout or how often we were going for dinners. The one that really blew my mind was how much we were paying on subscriptions that we didn't even know, because I have 3 kids and they've got subscriptions to a whole bunch of stuff. And it was out of control, Andrew. When I say out of control, I'm actually ashamed to say the number right now on this show, because people are like, are you insane? On monthly
all personal consumer stuff, right?
All personal consumer stuff.
Like cable and Apple and all that, basically.
Oh. It was gaming. It was art. It was, oh man, it was so many things. It was crazy. And stuff that had been running for years that nobody even knew what it was. And then everyone was like, oh yeah, I used that thing 2 years ago and it's been billing for, years. Insane. Right. So we looked at our finances and we cut everything that we weren't using, that we just really weren't paying attention to because things were so easy before. Yeah. We just said, hey, we need to cut all of this, pay attention and cut all this stuff down. And as we have been continuing to do these meetings, especially this month, we looked at the next 6 months and we said, you know what? Let's not do any big projects. Let's just make sure we're padding the cash account for the next 6 months, because things seem weird. And whether people are doing that.
When you say weird, you mean this instability all over the place, right? It's
weird.
It's
now. If
something's off. Some things are off. I mean, you'd have to be clueless as can be to not feel like there's a lot of forces working against the world right now, right?
Right. And I also understand that the weird thing about the stock market is it's the only business on earth when everything goes on sale, nobody thinks it's a good thing and goes in and buys it.
It's amazing, right?
It's amazing.
Totally counterintuitive.
It's totally counterintuitive. And if you actually look at the big dip that happened last week, the majority that was sold off by individual investors. And the rebound back up right after that was institutional investors buying up the dip. So again,
usually how it goes, yeah.
Smart money buying it back up when it's low, dumb money selling it off because they're afraid. You can definitely be, if you're liquid, it's never a bad thing to be buying when things are tumultuous and things have big dips, because that's where you get your big returns. I'm just not a huge investor guy. So I'm doing what like the majority of people doing is saying, let me just hoard my cash right now because I feel unsafe.
Mm-hmm. I think that's not a bad way to feel. It's okay to feel unsafe. I mean, you can't be positive all the time to our point of opening the show here today, right? I mean, you have to look at things for what they are. And And we're also in a weird time where there's a lot of just denying reality, right? Like everything we're talking about here on the show today is the reality of the numbers, the
Correct.
national debt, the consumer debt, the auto debt, the mortgage debt, the inflation, the wars, the funding of wars, the open borders. I mean, these are all bad things for you and me, the American, or if you're not in America, just you, the citizen, right? You the individual, right? A lot of this is not going to be good for our families long term. Now, as far as defense, I'm always a big believer. You are as well. I think when we met in the financial services space many, many years ago at a conference. We got instilled in us when we were in that financial education space, Aaron, which I'm thankful for this day that we did. We got a couple things instilled in us that have stood the test of time to this day for us in 2024. And the first two are gold and silver. Just tried and true hard commodity assets that we've always owned. I always have owned physical gold and silver, and I also own them on the exchanges as well. There's exchange-traded funds like mutual funds for gold and silver where they actually hold the spot price of gold and silver. But check this out right here. I brought this up as well. I think we talked about this earlier. Look at the chart of gold. Can you see that now? There we go. So here's gold. Here's gold all time, right? Gold has hit an all-time high of 2,500-ish. Where did it go last week?
2409.
2428 looks like it's the high or something like that. I think that's the closing high, right? So gold is at an all-time high. Gold is up 500% here all time. The stock market looks exactly like this. So if you put the stock market side by side with gold, they would look very similar.
Except the returns on even the S&P 500 are exponentially higher than 517% in that window.
For sure. Absolutely.
Right? But the one thing that I think is really interesting to talk about is when it comes to gold is, yes, the price is up in gold, but gold is a hedge. It's a value hedge.
That's right. Gold
so if you actually look at what is the average house price in the United States right now, let's just say it's $500,000. Okay. It costs the same amount of ounces of gold to buy the average house today as it did 50 years ago. It was 150 ounces of gold.
Keeps up with inflation.
Correct. It's a storage of value.
Right.
And so buying up gold on a consistent basis stores value because the dollar keeps getting printed and its value goes down. It was 150 ounces of gold 50 years ago to buy a house. It's 150 ounces of gold today to buy a house. Gold holds its value. So we've been big buyers of physical gold and silver for a long time.
Right. Exactly right. So gold and silver, and people like, oh, wow, how do you do that? Right. There's a million dealers out there in which you can buy pure gold and silver. Now, you can also not take possession of it, and you can buy them on the stock market in the form of exchange-traded funds and mutual funds that hold gold and silver, or even hold gold and silver mining. So that's one as well. Bitcoin is becoming enormous now. So that's one of my topics for today. Just last month, Aaron, July 2024, here it is, August 7, 2024, JP Morgan Stanley Chase, I should say, not JP Morgan. Morgan Stanley Chase is now in the crypto game, which means they now have access to ETFs, and they just made an announcement last week that they are going to unleash, their words, their full suite of advisors to be able to now offer crypto exchange-traded funds. So when I say exchange-traded funds, basically like mutual funds, right?
Yep.
Just different structure, but same concept. Now crypto, Bitcoin, Ethereum, some of the big crypto names, they're now offered in the same way mutual funds are offered on Wall Street. So that gets my attention because, again, follow the money.
Yep.
Institutional money is now becoming buyers of Bitcoin, crypto, creating ETFs, pools of crypto, et cetera. So that gets my attention. Now, big institutions have always bought gold and silver as a hedge. They've always taken possession of it. The United States government has a lot of gold and silver. Russia has a lot of gold and silver. China has a lot of gold and silver physically in vaults, right? So a lot of analysts are predicting that Bitcoin could start to become the digital gold, the digital hedge against these forces that we're talking about right here today. So that's something that you want to look at. And this is something that Bitcoin can be bought. You could buy $1 worth. You could buy $100,000 worth. There's no limitations. You go to Coinbase or a platform like that, and you can buy Bitcoin and Ethereum direct. So I chip away at Bitcoin, and I have for years. I don't have a ton of it, but I have it as a hedge. I don't have a ton of gold and silver, but I have it as a hedge. So when times like these hit, I still have some exposure to the stock market, mainly with managed funds and indexes and things like that, and a little bit of trading that I do on the side. I don't really feel terrible because my gold and silver and Bitcoin and things like that and some of the hedges I have do very, very well right now. So you have to be able to you have to be able to play both sides. I don't think you should get out there and try to time it and trade it. But having these hedged positions like gold, silver, and now Bitcoin, which I think has tanked to about 50,000. Aaron, some of the predictions I'm seeing right now, that just happens to be one of the areas I'm studying most in finance, is just Bitcoin. I'm seeing guys like Kiyosaki going all in on Bitcoin and building their networks and communities around Bitcoin. I'm seeing Tony Robbins and some of the big financial names. I just mentioned Morgan Stanley. They're now buying from an institutional standpoint. That should get your attention, right? It isn't fly by night anymore. It's now becoming a staple asset and a digital asset. And I predictions I'm seeing is that Bitcoin could be 100,000 plus by 2024, 2025. It's 50,000 right now. That's 100% return.
I agree.
We have a good friend, Mike Dillard, who really has probably got me down this path more than anybody, who I think is as heavily invested in it as anyone I know, and who thinks that the whole financial future resides on blockchain and in the crypto space.
And I think that the other thing that's maybe overly simplified in people's minds is, Andrew, you know that I hold a small real estate portfolio, vacation rentals. Oddly enough, those vacation rentals have seemed pretty stable, pretty resistant to downward pressures, because people who can afford to go on vacation still go on vacation because they're not impacted as much as anybody else.
Right.
And I had a lot of people make fun of me in the investing space when I told them I don't have any mortgages on them. They said, "Oh my goodness, well then you need to go out immediately and leverage them and buy 3 or 4 more. And don't you understand the cash flow covering the base and the mortgage?"
Well, there's an argument for good debt there too.
Yeah, there's an argument for good debt, but I felt like it was more important to me to have stability and to have this untouchable asset than it was to, try to build it into some massive empire. Well, I can tell you those same people.
You didn't want to get too, it sounds like you just personally didn't want to get too leveraged.
I just personally didn't want to get too leveraged, is really what it comes down to. And those same people that made fun of me 4 years ago are telling me I'm a freaking
that was
genius.
A smart move, buddy.
What a genius you are right now.
Yeah.
I have a good friend who has a financial services company. 3 months ago, he moved all of his clients into treasury bills, and everybody said, "Are you insane? The market's going crazy right now." And he said, "I can see something coming." And all of a sudden right now, all of his clients are saying, "Oh my God, you're a genius," right? So sometimes that counterintuitive approach is important. And I know that if you want to get to massive, massive amounts of wealth, I don't mean like upper middle class. I don't mean the high net worth individual category. I mean massive, massive levels of wealth. You really have to understand the debt game, and you've got to leverage debt at a very high level to get that. I'm not trying to play that game. I'm trying to play
You're more conservative. You're more personal, right? This is more of a wealth builder for you, not an empire build for you, which makes perfect sense. It just depends on your goals. It's like fitness. It depends on your goals. Hey, should I lift this amount of weight or this amount of weight? Well, it depends on your goals. It's the same kind of thing.
Sure. Do I want to be Mr. Olympia and pump a bunch of tren in my body and all that stuff? No, I just want to be fit. I don't blame anybody that does.
Different goals, different outcomes.
And I just wanted to be more safe. Now, I have been through ebbs and flows myself in life over time. And because of those ebbs and flows, I've realized I personally hate debt. I hate it with a passion. So I have a credit card that gets paid off every month. I have one mortgage out of my property portfolio, which I chip away at every month. I love being debt-free. If you can reduce your expenses on a monthly basis, go through your finances, cut anything you don't need, chip away at your debt as fast as possible, it's a lot easier to navigate these situations when you don't have a lot of requirements and obligations financially.
You certainly feel a lot better.
You can just breathe and relax and strategize without that pressure.
Yeah, I would agree. I mean, I think one of the things that nobody will disagree with is that when things contract, have as little debt as possible.
Lots
so
of
now
cash.
We're seeing contraction and we're seeing all these evil forces here. And that would be a good time to have less debt, not more debt. So probably your strategy, of course, works now.
Hindsight 2020.
Hindsight's 2020. So I think that's a good one too. So hedges we talked about, gold, silver, Bitcoin being the newest hedge, being debt free. I'm going to make a prediction, Aaron, before we end here. So I'm looking at some charts here, as you can see.
Sure.
I'm a big old school energy guy, let's call it, right?
Sure.
Which means I don't ever believe, first of all, I've completely dissected the entire climate agenda. I'm not saying there's no such thing as climate change. The climate has been changing for millions of years. I pay multiple resources every month to study finance and energy and everything we're talking about here today. So I'm not the kind of person that reads something or goes with the narrative. I actually pay and consume multiple paid newsletters, white papers, books, and resources every single month. All of my financial analysts do not believe, and they have empirical data, that the electric game, the wind game, the solar game could sustain the population for any extended period of time. So they're trying to eliminate the oil industry and the gas industry, and they're trying to go all electric. In fact, in America, they're actually trying to mandate electric cars, which is insane. You can't mandate things on people. That's nuts. The fact that they think cars are hurting the climate is the height of insanity. So I'm looking at good old-fashioned things like crude oil and natural gas. Because what's going to happen is they're going to push so hard, Aaron, like they've done with many things, that you might be able to help the environment a little bit, but you're going to completely cripple societies and dramatically decrease their wealth and their opportunity to get good, clean energy, right? So gas, oil, things like Chevron, Exxon, Conoco, and now they're all leaning towards nuclear. They think what's going to happen is this whole green energy thing, at the end of the day, the math is the math, and the math is atrocious. I mean, it's so bad what they're investing in with all the green energy and the infrastructure bills and all this. They're trying to just go all in on electric, and they're trying to go all in on things like wind and solar to back the electric, but the grid can't handle it, to my point earlier. So we're probably going to come back somewhere in the middle, which is smart, where you have definitely some electric deployment. Cool, right? Electric car, great, right? You want an electric car, get an electric car. And there's definitely going to be a need for oil and gas forever. There's not going to be eliminating fossil fuels. That's insane, okay? But now nuclear is coming up. In nuclear energy, they're now thinking can be that middle ground that bridges the gap between having a healthy balance of electric, wind, solar, oil, gas, and now nuclear coming in as the staple. So these are areas I'm looking at from an investment standpoint. And as a contrarian, I would go against everything that's all green, climate, ideology, sort of like religious cult feeling, because narratives work in the short term, but reality works in the long term. And what I'm seeing is that the big money is going back into good old-fashioned oil, gas, things like nuclear, things that are staples of society for however many hundred years, right? So that's where I'm looking now, as well as future out. Kind of going against the grain a little bit, right? I think a lot of the big institutions want to go green, and they want to go with all of the, of course, there's a lot of subsidies, which is why they do it, right? So Good old-fashioned natural gas and oil is getting a lot of institutional attention right now, and it has my attention as well. So prediction would be don't abandon fossil fuels because they're being demonized. They're being demonized to create way for another industrial complex, which is the electric industrial complex.
I think I'm going to pivot the conversation right now to the business owner side. We've talked about personal finances and so on and so forth, but we got a lot of people who followed us from when we were originally Sales Velocity that are business owners. I'm going to go back to the presentation I was doing last week for these investors. And the question that I asked them very bluntly was, are we all screwed? Right? I mean,
there's that argument also that a lot of people actually are like, forget it, man. We're probably going to end up in World War III here. There's people who are like, whatever.
I mean, you could look at all these factors and just throw up your hands and go, screw it.
Listen, it wouldn't be a crazy argument.
It wouldn't. I personally don't believe we're all screwed. And I said to them, people are still buying, but, underline but, only if credibility and trust is established at a higher level than ever before.
No doubt.
Everybody has to come around to this new reality because we got spoiled. And I'll tell you when we got spoiled. There was the haves and the have-nots during COVID. And for those people that were in the have-not category, gyms, restaurants, those things, I couldn't feel any worse for you. My wife had to shut down a physical business because of it. Yeah. It was criminal. It was ridiculous. I get it. But there was another group of people like myself, digital marketing agency. COVID was a gift. Yeah, we just thrived. Why? because money was being dumped from the sky. People were staying home. They were bored. They were looking to upskill. They were looking to entertain, whatever it was. And they dumped a ton of money into the economy. And so if you were in one of the have groups, making sales was really, really, really easy. And we got spoiled. And now we're paying the price. There's always yin and yang in everything. So now we're paying the price of being spoiled. When you dump money into the economy, inflation goes up, interest rates go up, all of those things, right? Mm-hmm. So, but here's the example I gave to them. Are we screwed? No. Here's why. And here's why it's all about trust and credibility. And you were shocked by this when I told you about this before the show today. College enrollments are up.
That was surprising to me.
2022, up 5.09%. Up 2024, 5.16%. 2025 projected to be up 5.25%. I think it's fair to assume that most people know that the college of today and what it offers us on the back end is not the college of 40 years ago.
Or even 10.
Or even 10. Getting a degree, what does it mean for your career, average earnings, la, 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 la. It's not the same thing. Yet, enrollments are up. Why is that? Because colleges have 1,000+ years of built-in credibility that it will improve your life if you attend it. That's my point.
It's one of those knowns, right? It's almost like an automatic. You go to high school, then you go to college. You go to high school, then you go to college. It's almost like an automatic. At least in American society, it's almost an automatic.
It's an automatic, right? Because they've got 1,000 years of trust and credibility open. So you got to say to yourself, okay, well then where's the opportunity for me right now? Well, a big one right now, Andrew, is people are, if they're listening to us, this is a given. People are searching for a change.
Yes.
Right now, they want more control over their future. They want more skills. They want more money. But if they're going to exchange their scared money right now for those things, they want more proof, more trust, more credibility before they're going to do it. So you have to ask yourself, are you providing that? Are you really the expert that's providing more proof, more trust, and more credibility than anybody else in your space?
And there's a lot of them.
Because if you do, they will buy. And I'm going to give you another example that I know what I'm talking about. We have a client. They have a show on A&E and Hulu. So they've got a ton of eyeballs, right? Their conversions to the same products compared to people without the show right now are off the charts.
Meaning they're doing better because of the show. They're getting more people.
Trust and credibility already established.
TV
from the
test
show.
of time, right?
Right? Ooh,
TV.
Balloons.
What happened there?
I don't know. I put two fingers up.
How'd you launch those balloons? That was crazy.
Anyway.
That was AI. Those were AI balloons.
Those were AI balloons. Now, here's the other thing. What we have done with them and similar products in the industry, similar clients, is we've said, hey, rather than trying to move somebody right to your premium product, let's give them the opportunity to engage and feel with you at a much more intimate level and introduce that into the ecosystem. Whether it was them or whether it was another client, their conversions from the lower priced product where they actually spent 3 or 4 days with people live, educating them, their conversions on the back end of that to their premium product are like 56%. They're off the charts.
Yeah, nothing like live.
Because they had an opportunity to feel them. And this is the word that I keep talking. We have a client, you probably know him, Andrew. His name's Dr. Joe Vitale. He was from the movie The Secret. He was very famous in the time that movie came out. I said to him, Dr. Joe, it's not the deal, it's the feel right now. People need to feel you. They need to know the power that you have and how you can impact their life. So we need to put a mechanism in place to build the trust, build the credibility, build the proof. We need to slow down to speed up right now. And he was like, cool, let's do it, Aaron. I trust you. So you have to look at your business model right now and ask yourself, am I doing the exact same things that I've always done or worse? If I was one of the haves in COVID, am I doing the exact same thing I was doing in COVID, expecting to have the same results now? Because if you are, I'm not going to say you're in for a world of trouble. I already know you're in a world of trouble because I can see the stats. So I don't need to look at your stuff. I know you're in a world of trouble. So it's about understanding that we are in a trust recession right now because of all the things that are going on. You have to look at how to build and manufacture that trust if you want to make sales at the same level or even more than you were making a couple of years ago.
Yeah, I agree. It's one of those comments where what got you here won't get you there. I think it was said in one of the famous, I can't remember the name of the book at this time, but what got you to $1 million a year won't get you to $2 million a year, whatever your number is, right? But I think you're right about that. There's so much volatility and negativity that the mind can't not carry that into a business transaction, even though it's not about your business, and it could be geopolitical, it could be economic, it could be social, civil unrest, it could be political. But because that weighs on the mind, it carries into, hey, I'm going to buy fill in the blank today. I'm already a little anxious. I'm already a little upset. I'm already a little annoyed about the news last night. I'm already a little pissed off about this, right? So you carry that, I guess, negativity, if you will, into a transaction or into a presentation. So I like to say we're probably starting not from zero, but less than zero with prospects now. Is if I'm going to make a presentation to you, Aaron, I'm going into it thinking that we're even playing field and we're at zero, but we might be at like -10 because you're already coming in pissed off and maybe you didn't want to be here and the world around us isn't as optimistic and pretty as we'd like. So we might not have that same attention and receptiveness that we would like.
And one of my favorite quotes of all time is "The confused mind says no."
And what about the annoyed mind?
I don't know what the annoyed
now
mind
you have
says.
Annoyed and confused.
Yeah, maybe you got annoyed and confused right now. So
right? A lot of people are annoyed right now, right? I guess for whatever reasons, right? Everybody has their issues and reasons.
If people are confused about what's going on, which all the things that we talked about right now,
everything today,
could certainly create confusion.
Sure.
Then when given the opportunity to buy something, their immediate default response is no. The confused mind says no.
Or, you know what, this isn't a good time because timing, and I'm going to probably push it off to the new year, whatever.
I'm going to push it off. I'm not going to do it right now. It's too expensive, blah, 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 blah. Mm-hmm. But if you can create clarity, if you can spend a little bit more time and put in a little bit more effort and a little bit more resources on clarity over confusion, they will still buy, just as I referenced with my example from enrollments in college. The money hasn't gone anywhere. That's the key thing we always have to remember. The money has not gone anywhere. It's just that people are feeling unsafe. So we have to make sure that we can provide strong enough reasons for them to part with it.
Right. Agreed. Well said. Yeah. So I think overall big picture here today, we've talked about what's going on. Shockingly, a lot of people don't know what's going on. Probably some of those numbers we shared in the beginning here, Aaron, consumer debt, auto debt, mortgage.
Crazy.
Overall country debt, last two presidents' debt. I mean, all this stuff we shared, most people are like, holy, I never knew this. How would I know this? Right? So you have A, what's going on. And then B, we have what are we doing about it? What are we doing, right? It's our show. What are we doing from a hedging standpoint and maybe from an investing future pacing standpoint, right? What are some of the things we're looking at down the road, right? Bitcoin, oil, gold, silver, good old-fashioned natural energy, right? Not trying to time the market, right? Getting cash flow positive, eliminating debt. These are all things you can adopt and things you can play with. And then I think as a business owner, which is probably most of you watching, is yes, you're probably going to have to do more with less right now. And you're probably going to have to play a different game when it comes to communication and comfort and experience and really value. Of course, we've talked about that for years, right? Is how different are you? How much more value can you bring? How much more hands-on, more communication, right? I've always been a big fan in my company, as you know, where constant, good old-fashioned outreach by phone. Almost nobody does it today. Right? Somebody gets a phone call, even if it's a voicemail, they know it's real. They're like, wow, I can't believe they just called me. You never would have thought that in 2024, the phone would be such a big lift and so impressive. The telephone is so impressive today, right? The contrarian
But that's because
approach.
nobody else is doing it.
Right, because nobody else is doing it, right? So these are little levers you want to pull and little things you want to put in place because you're going to have to do more with less, right? We were talking in the beginning about why is it costing us so much more for the same, right? From an ad conversion standpoint, why is the metric here when it really should be here? Is this the new normal? These are things we have to contend with, the new normals, right? And that's what I think you want to come away thinking about is what am I not seeing? What am I doing the same way that I need to do differently? If I want to go here, what got me here can't get me there, right? These are just, I guess, different ways of thinking and more of a contrarian approach to what's going on around us, because I think here we are beginning of August. Things aren't going to get prettier between now and November.
No,
in fact, they're probably going to get a lot uglier. For me and my family, I'm a little bit more of the, I guess you said before in the beginning, the pessimist, or what I call the skeptic, is nobody's leaving Florida for the next 3 months. There's nobody getting on planes. There's no travel. There's no countries. There's no vacations. That's how concerned I am about attack, social unrest, grid attack, war, pandemic, God forbid, all of it. It's all on the table. And I can't wait for that feeling to go away where it's not all on the table and things feel relatively safe. But then you have the argument of, hey, when you're not expecting it and things feel relatively safe, usually that's when the off the charts things hit. But right now, to the point of the show, is there's just too many forces working against us right now to play it comfortable. This is the time to play it uncomfortable. Be on your toes, sleep with one eye open, right? This is that time.
Agreed.
So yeah, a lot to unpack here, man. I guess a lot of it's perspective too, right? How do you tackle the inevitable, right? I think again, at the end of the day, you want to come back to just making sure you know what's going on and you know reality, because you can't really tackle something that you don't know much about. So it's a good time to get educated in some areas that maybe you thought, hey, I've always wanted to get educated about, fill in the blank, gold, silver, Bitcoin, stock market, whatever, because these are really good times to be able to dive in and maybe get some deals.
I'm going to end it with this quote today, and I don't know why it stuck with me, but somebody told me this during one of the last big dip times that I went through. He just looked at me and he said, you know what, man? Tide goes in, tide goes out. It's just part of life. And it stuck with me in my head. Tide goes in, tide goes out. Did he say that the tide's gone out and it's never coming back again? No. He said, tide goes in, tide goes out. You have different strategies for different times. You can't play with the same strategy all the time. Your strategy has to adapt to the time when the tide's in and when the tide's out. And once you gain that knowledge, then you don't have a lot of fear about what's going on, because you already know the things that you need to do to adapt.
Yeah, and I think you won't get as emotional if you have that mentality as well, which is good.
Correct.
So good, man. We'll leave it at that. That's Aaron. I'm Andrew. We will see you guys in the next episode. Have a great one.